Joining us first this morning on CNBC is Danny Meyer. Danny, it's great to have you back. Good morning.
Good morning to you.
You and I, all of us, have had some tough conversations about the restaurant business over the last year and a half. What does this particular move say about where you think it's headed?
Well, I think this really underscores the amazing confidence we have in the future of the restaurant industry. It's actually coming back in an amazing way. I think if we've learned one thing, besides the fact that this industry is incredibly resilient and the entrepreneurial spirit of our entire industry is at an all-time high, it's that people have been craving being together at restaurants for so long, and we are now experiencing a big pop everywhere. And this is just a great opportunity to express our passion for an amazing American brand that now is actually 3 different brands: Panera Bread, Caribou Coffee, and Einstein Brothers. So we're really excited about this.
Right. Now, on the spectrum of choices that you've looked at, what did this trio say about where you think the consumer is headed to the biggest degree? Is it a quick service move, or is it more complex than that?
Well, let's go back in time just a little bit. When we first launched Hugs, which is the ticker of our SPAC, we had one approach, and that was to identify a business irrespective of its business sector, but one who championed what we call enlightened hospitality. That's our investment strategy, to look for a business that believes that if you first take care of the people who work in your business, that sets off a virtuous cycle that leads to better outcomes for your customers, the community in which you do business, your suppliers, and ultimately your investors. We are absolutely amazed that the one that we ended up getting a chance to work with and to be a cornerstone partner in is Panera Brands. So what it says to me is we got incredibly fortunate. The metaphor I make is that when you start a SPAC, it's obviously not an operating business. Your investors are giving you bait, and they're saying, go out deep sea fishing and let's see what you come back with. I just don't think we could have come up with a better and bigger and tastier fish than the one that is Panera Brands.
Yeah, I mean, this conversation's making me hungry, Danny. It's Morgan. Hugs is up 7.5% on this news this morning. But it's an interesting deal that's been struck here, because both you and your SPAC are going to invest in Panera Brands, which is going to pursue a traditional IPO process. So how did this actual deal come together?
Well, we happen to have amazing new partners, which is JAB Brands. They are the primary shareholder and long-term shareholder in Panera Brands. And when we were looking to see what kind of a business we would partner with, we had the very, very good fortune of coming together. And we realized that we have a very, very similar approach to business. We knew that our mission of spreading hospitality wherever we could would find an amazing platform with Panera Brands. Do you know that 1/4 of all Americans dine or drink at either Panera, Caribou, or Einstein Brothers, and Brugger's, to add another one in there, every single year? What an amazing opportunity. So we've been talking about this for a while, and this was a great way to democratize the IPO process so that our Hugs shareholders are going to have an opportunity to exchange their shares dollar for dollar at the IPO price when Panera has its IPO. So this is going to just be a win-win all around. It's an innovative approach, and it's one that we're really excited about.
Yeah, Danny, it's David. It is innovative because we haven't really seen much like it. I mean, why is it preferable for those who invested in your SPAC with the idea that you would actually accomplish a merger, as you say, go deep sea fishing and find, that big fish? Why is this preferable to that? And is it reflective, perhaps, of your inability to find a merger partner?
I think to the contrary, we found the best possible merger partner. We are cornerstone partners. I believe in this so much that I'm making a personal investment on top of this. And I think what it basically says is if you're a typical SPAC shareholder, you may not have the opportunity that this presents to actually get the marketed price in a traditional kind of way. And so nobody, I think, can say, hey, these guys came up willy-nilly with their own price. This is going to be the market speaking, and that feels great to me.
Danny, we'll get to labor and input costs maybe another time, but it's great to see you again, and we look forward to watching the space try to heal itself after a tough couple of years. See you soon. Danny Meyer.
Thank you all.